Good morning, folks. I hope you are well, and welcome to another one of my videos. So I have two pairs on watch today, which are Euro dollar and Aussie dollar. I have actually just kind of not switched my bias, but included another bias on these pairs, and you'll see what I mean when we drill down. I think there might be an interesting lesson in there for one or two of you. Just to say that I took a loss on Euro Aussie yesterday. I shall break that down for you now before I break down the pairs which I've got on watch today. So I said yesterday, one of the reasons this was lower down on my list, although it was still a very it was a low risk trade, a very high quality trade, because I traded it using weighted time frames, and there was a weighted structure forming within here. But on the higher time frames, we could see that we had with this structure here, and we'd kind of broken out of that. So I was looking for shorts. We hadn't really responded from anywhere on the left. Okay, so that was a slight negative, and we had all of this volume here. So potentially this could be just a phase one, phase two, phase three, where this pushes higher, but partly because of how much volume has been generated in here. Okay, the volume that's been generated will often dictate how far price moves. And I said previously that if we just measured this in terms of a simple phase one, phase two, phase three, that could be taking us up to these areas. And if we measured it from the break, that would actually take us up to the wick. Okay, so these things are mathematical. Okay, the structures that we look for. However, that doesn't mean to say that we can't capitalize on a short-term move to the downside in the meantime. And one of the reasons that was the case is because if we just start zooming in a bit, as I said yesterday, I don't like it. The more you have to zoom in to find your structure and your entries, obviously it doesn't carry as much weight as if you don't have to zoom in so much. But regardless, we can start to see even on the daily chart that we had this move down, the correction, and I was just looking for a further move down, potentially even just to here, but potentially to take out to continue lower, because there's a consolidation here on the 4 hour, which these lows near miss too. And I said previously, if people are getting long here, okay, there will likely be a zone of stops here where these gaps have narrowly missed the base of all of the structure. Okay, you'll see what I mean as we drill down. But as we drill down, we can see now things start to get a bit interesting, because now we can see the gaps. We can see this consolidation here where there was an impulsive move. Okay, and we can see the gap to there, another gap to there, zone of orders likely down there. On the 4 hour chart, you can see that what I'm looking for here. So we have this impulse correction potential continuation, and you can see again gap to this low, gap to this low, gap to this low. Okay, so there's likely a zone of orders here. So if we do respond from the top of this structure, which we did, then we will likely take out those orders, even if we don't commit down to here. Okay, even if we take these out and price responds from there, okay, that likely gives us enough profit potential to get to there before a potential move to the upside, even if that was to occur. And as we drill down to the 1 hour, things get even more clearer. So what we had here is this is where as I said yesterday, the pattern separation comes in. So we have this structure here. Okay, we break the highs, take out the stops that were likely there. What did we do? We gap to it. So that means there's likely stops in that area, likely an area of value. We come down, footprint, where volume was generated, and there was a big runoff last time around. Enough of an exchange of liquidity here to cause price to smash through all of this volume, all of the lows. That tells me there's likely liquidity there. We tap into that. Sure enough, that is where we respond from, likely for those reasons. We then move down. So there was a consolidation here. If you were looking to get short here, what we would have been looking for is something like this. Okay, and then this would have been a 1 hour structure, a rejection, and then you would have got short there. However, price just broke through the low, and interestingly, what was interesting to me is that it broke the low, okay, and it left a little footprint again, Okay, so this is likely where the volume is now after we sell off. We break this and sell off impulsively, especially as we gap to that area. Okay, we gap to it not multiple times. If we've gapped to it, that likely means there's a zone of orders here. The stops are likely above. Okay, we respond there. Okay, so I got short after the 4-hour rejection, as I explained in yesterday's video. Not the best entry candle, but it met the requirements. Okay, so said yesterday people would see this as a doji. A doji is an indecision candle. Okay, and an indecision candle is a candle which has, kind of equal wicks either side. This doesn't have equal wicks either side. It has a smaller wick to the downside and a much larger wick, a washout wick to the upside. So that's all we need to see. And then I got short just underneath the close of the body of the candle, and then I stopped cropped, which is when you crop through the wick. As I said yesterday, your stop loss should be positioned where the trade becomes invalidated. Okay, not necessarily just above the high for the sake of it. Okay, if price doesn't commit after this and it starts coming back up there, then this is likely not the trade that we think it is. So therefore, it makes no sense to have your stop loss above here, because by this point, even if it comes up to here, the trade has already been invalidated. So therefore, all you're doing by having a wider stop is compromising your risk to reward. So I got tagged in. Okay, I'm now managing this on the 1-hour chart, but I got tagged in. Okay, there, and you can see I'm already out on the 4-hour chart, but I was tagged in. I can't remember the exact time. It would have been about between 6 and 7. So this has been locked, so it should be the correct time. Tagged in here, and then soon as, if we just look at this on the 15, the higher time frames hold more weight, but as soon as, so we had a correction here, potential impulse correction continuation, but as soon as this rejection candle here, so if you were going to take this would have been a 15-minute entry, okay, here, but you didn't really get the entry candle. That's not really the entry candle that I would look for. As soon as this failed, this structure here, this is likely not the trade we think it is, and because we've broken out of that. And then I said in yesterday's video that if this doesn't commit, then it's likely forming something more complex. And so I was taken out, because I'm managing this on the 1-hour chart now. I think I was taken out by that candle. I don't think that one took me out. I can't remember, but that one definitely did. I'd have to check my broker data. But anyway, if we just look at this now, just play. This is exactly what I meant, right? So if price washed out all that liquidity and it doesn't commit, this is likely forming something complex. It's likely not moving to the upside long term yet, because we still have gaps all over the place here, which would likely need to be taken out. And if this is moving to the downside, then where's the next area of volume? Well, the next area of volume is likely here, okay? Okay, the reason I wasn't concerned about this is because all of this formed beneath this structure, okay? So this high is not necessarily relevant, okay? But it could still be relevant, just not necessarily at that moment in time, okay? So when we break a correction like this and we correct under it, this becomes largely irrelevant unless we do something like this, which is giving me the indication that this might be a phase 1, phase 2, phase 3 now, to tap into this area where there was a sharp move, okay, which is what we call an M-style pattern. So when a structure like this fails and we have volume sat above, what we often get is something like this. We tap into it, and then if we did that, I'll be looking for the push down, and I'll be looking for the correction, and then I'll be looking to get short from there. And these M-style patterns tend to be very aggressive, but it doesn't look like it's ready at this moment in time. So that is Euro Aussie. Few lessons there. I'm going to have to speed up a bit, I think. So that was a loss. Very happy with that. And what people do is they go, how can you be happy with a loss? Well, because I've tested it. I know if I take this trade 100 times, I'll make money. That's why I'm happy with it. So that is Euro Aussie. So Euro dollar, previously I was looking only for shorts, and the same is applicable for Aussie dollar. However, the price has done something. This is the lesson I wanted to bring to you, is what a lot of traders, because a lot of traders, if you go on TradingView, you'll see this, and sometimes in the comments section of when I post these on YouTube, all you'll see is egomaniacs telling you what the market will do, that you're wrong, blah blah blah, etc etc. Now the problem with that is, not only will your ego humble you in seconds if you take it into the market, which is probably why they're on YouTube watching tutorial videos in the first place. But also, if your ego is led by having to be right, what will happen is when the market shows you a clear sign that something may have changed, and I use the word may in inverted commas, you'll miss these messages from the market, which may give you an opportunity to flip your bias. Okay, and that's something that took me quite a long time to do, not for egotistical reasons, just because I found it difficult to see things like two ways at the same time, regardless of whether it was. Regardless, I just found that difficult from a technical perspective. But so what we have here. So I'm now looking to get long or potentially short, and you might think, well, that means you don't know what you're doing. Well, no, it means I don't know what the market's doing. And you don't have to know what the market's doing to make money. All we have to do is know what we're doing, okay? So what is the market showing me at the moment? It's showing me that we have an area of value there because there was volume generated, and we had a runoff from that area where there was a big sell-off with very few steep pullbacks along the way. That tells me it could be an area of value for a sell, okay? And especially as we have the gaps to it, okay? We have a gap to this area, and especially as we near miss to it again. If people are selling here, they may have their stops just above. But as I zoom in, okay, the price has done something very specific. So yes, we have the gaps, and I said yesterday that this 1, 2, 3 could be the completion of a move, and I said that just because it's a completion, it doesn't mean to say that we're automatically going to go to the downside, because what price could be doing after completing this 1, 2, 3 move is generating volume to push higher. I'm not sure whether it was this pair or Aussie dollar I said that on, but I definitely said it. So the market is doing that now. And what do we have? When we see a structure like this, which is a bit steep, what often happens is that price will come up. It will give us something which isn't as steep, push down, and then we get something which is flatter. Okay. And that could be happening now, because if we just look at that, we've moved away from that area. There may be a zone of orders here. And if it was to give me something like it would be at that point a 1 hour bull structure, because if we were to zone out, okay, I can't see the structure on the 4 hour chart, but I can see it on the 1 hour chart. So therefore, if price comes down again, it pushes up, comes down again, taps into this area. If we get a 1 hour rejection, I'll be looking to get long on this pair, okay? Because that would imply that the sell idea has failed, the sell idea has been invalidated, and that will be a message from the market, okay? So I would look for, we've got the 1 hour structure, but if we come back down, tap into that area, what price might be doing now is forming a bit of a middle section where we get something like that. We come back down, tap into that area, and then I'll be looking to get long from there with a 1 hour entry specifically, because it's a 1 hour structure. If that doesn't happen, and what we originally thought was going to happen, okay, if we push down below this area of interest, then that buy idea would have been negated, okay? And I do want a break below, specifically below here, because all the while we're contained above this could still be a retest of the back end of that to go long, okay? So if we did get a break below the area of interest, and we got something like any kind of flag at all, I would look to get short within or on the break, and then I would trail my stop loss and set a take profit down to there. To the upside, I would set a take profit if I got long at this next high. Okay, the internet's just froze again. Bear with me. Scotland's infrastructure really isn't fit for purpose, and that's probably why commerce just does not move to Scotland, because it just doesn't get its it doesn't get itself in order. So there's a high up there. Okay, so that would be where I set my take profit if I was to get long. We shall see. What I've done is I've set an alert just at this area here, because this is the area that I'm interested in. This is the area that I'm interested in for the longs, and it's also the area that I'm interested in for price to break that area to give me the short idea. Okay, speeding up ever so quickly, ever so slightly. Same thing on Aussie dollar. Now, why is the same thing happening on Aussie dollar? The same thing is happening on Aussie dollar because clearly both pairs include the dollar, and clearly, therefore, this is with regards to what the dollar is doing. So if it's regards to with the dollar what the dollar is doing, I'm going to be flicking to the DXY, which is the dollar index, a weighted index of how the dollar is doing against a mixed bag of currencies, primarily the euro. It's weighted in favor of the euro, but this is the dollar index. I'll be looking, if I place a trade on either of these pairs, as to what the dollar is doing, okay, the dollar index. And if the dollar looks like it's getting short, we get something like what I've illustrated. Okay, that's just a larger version that could occur. If we get something like that, or the dollar looks like it's about to go short, then I'll be looking to get, that's just that's an extra confluence factor for getting long on euro dollar or Aussie dollar, because these will move to the inverse of what the DXY is doing. And similarly, if I'm looking to get short on euro dollar or Aussie dollar, then I would be looking to see some kind of turnaround. What we would like to see, something like that, okay? And then we could be able to capitalize on a move short on those pairs if the dollar moves into these areas, even if it responds from there, okay? So I'm just going to be correlating just to see what's happening. But moving on, so Aussie dollar, previously I was looking for shorts. However, I did say that because we've broken all of these significant lows, washed out the liquidity lightly, and moved to the upside aggressively, this could still be an impulse correction continuation to push higher. The reason I wasn't looking for that specifically yesterday is because it wouldn't have been ready by the end of the day, and this is a daily forecast, okay, not a longer term forecast. However, we've had the same thing on Aussie dollar as we had on euro dollar. Prices potentially showing us a message, okay? So what has it done? It didn't yesterday start pushing down here. What it's done is it seems to have formed the same sort of ball structure as we've got on euro dollar forming at the minute. So with that in mind, what are we looking for is exactly the same thing. I'm looking for either a 1 hour structure, because this structure there, I can't really see it on the 4 hour. I can see it on the 1 hour. So therefore, this is a larger 1 hour structure, which means my criteria is a 1 hour risk entry. So if we've got something like this, came down to test the lows, pushed up, then I would look to get long. If we break the low and move below the area of inflection there, just as with euro dollar, I would then look to get short. And once again, I've got an alert set just above these lows, because that is the area where I'm interested in for the longs, and it's also the area that I'm interested in to see if price breaks that to kind of invalidate the buy idea and give us the sell idea. So that's what I'm going to be looking for from these pairs. I hope you found this to be of value. As I said, I had a profitable January, February, and March. For this month, I was plus 0.9% up for April. That last trade, I think, was because I'm risking 0.5% per trade on the Falcon Fund. That last trade was a 0.54% loss. So if you do the maths, I think that puts me 0.45% down for this month. But it's all good. There's still plenty of time left, and we judge ourselves quarterly, not monthly, okay? But that is it, folks. I hope you've enjoyed this video, and I'll see you again in the next one. Speak soon.